Hi, it's Paul McFadden here. So we're going to talk about how to flip property and make a profit here in the UK. We're going to talk about what to look for to ensure you make a profit, but more importantly, how to avoid the pitfalls and make sure that you're understanding the process along the way. So flipping property and making big profits. So it's a great strategy. It's a strategy that I believe everyone should do. There's always this appeal, if you think about it, to be a developer. You're finding something that's run down and then you can add substantial value by carrying out a renovation, upgrading that property, looking at how you can take a property from its current condition that's not that nice, it's maybe run down, or changing a bit of the layout, adding an extension, an attic conversion, adding an extra bedroom. There's lots of different ways in how you could add value and, more importantly, develop that with the right team to make big profits. And this is stuff we're going to cover in this video to make sure that you're aware of what to look for, and again what to look out for to make sure that you don't get any pitfalls that could really reduce your profit or you end up making a loss, and that's a big no-no. We want to make sure that all times we're doing the right due diligence, doing the right standard of finish to get the end value, in the sense that we need to then look at making a profit. Now let's look at things at a high level. So the few things that we need to look at when we look to buy property is, first and foremost, we want to be looking to buy property at a discount. Now, when you're buying at a discount, what happens is you're instantly getting appreciation. So if you think about it, let's say you have a property that's worth £100,000 and you were able to buy that for £80,000. So you've got a property in its current condition that still needs renovated, but you were able to buy it at a discount, which means from day one you've already made money before you even go and add value. In this same example, house is worth 100, you're buying it for 80, so you've bought at discount, you've got £20,000 of capital growth from day one. Now we further increase that capital growth by adding value. So we need to look at where can that value be added. In some cases, you're simply just going in and carrying out a full renovation. New kitchen, new bathroom, maybe new electrics, maybe new windows, maybe new doors, a lot of joinery work, paint and decorating, putting floor coverings down. We'll get into the nitty gritty on the standard in a moment, but you're really just taking a property in its current condition, renovating it, and by doing that, you're going to increase the value by adding that value through the renovation. Now, again, when we look at property where we can really make a lot of profit, especially if we're working the numbers, we want to look at opportunities where we can convert maybe a 1-bedroom to a 2-bedroom or a 2 to a 3. I want to look at properties where you can do an extension to the side or the back of the house. More importantly, there's a lot of property where you can do attic conversions as well, where you're adding an extra maybe 2 bedrooms by just doing that, and maybe an ensuite and so forth. So there's lots of different opportunities that we can help to develop a property. It's just looking and finding those opportunities online. And again, when you do your own marketing in a sense, and you're speaking to a lot of homeowners that are looking to sell properties, and if you're in certain areas where you know that you've got a few different things you can do by buying that property at discount, you can just do a simple renovation or look to see where you can increase the value by that extra bedroom, attic conversion, extensions, and all that good stuff as well. Now, to make all of this work, we need 2 important things. One is to know the numbers, so due diligence process, and then the next part is how we can make sure we get the right standard of finish to get the price that we're looking for. So when we look at the due diligence, and this is where we're making profit before we even start, because the due diligence process is where you mitigate risk, but more importantly, you start working the numbers. So when we're looking at numbers, when we want to develop a property, we want to flip a property for profit, the first 2 things that we need to know is the current market value. What is the current market value of that property in its current condition? Before you've done any renovation work, what is that market value? So by understanding the market, understanding the due diligence process, this is a lot of stuff that we cover at our Property Approach program, because we want to make sure people know how to do the right due diligence. But for simple terms here, we need to understand the current market value. So you're looking at a property just now, you know you can add substantial value, but in its current condition it's worth 100,000, just making up numbers. The second thing you need to know is the end market value. So you've got the current market value, and what is the end market value after you carry out the renovation? So this house is worth 100,000. Let's say you need to spend money to, upgrade the property, but then it's going to be worth 150,000 as an example. Now, how do you know it's going to be worth 150,000? Well, again, your due diligence process comes into place where you look online, looking at other like properties that have sold in the area, maybe seeking advice from a couple of different estate agents, and if you know the area well enough, you will see like for like properties that are selling at 150,000 or above, and then it gives you an indication, an idea of the standard of finish that you will need to carry out and do to achieve the same prices. So you're getting good indicators that this property, if you carry out a good finish, it's going to sell for 150,000. Now, here's where we can't get caught up in speculation and we can't get caught up in hype. We need to understand that we need to know the end market value by a definite number. If you have an estate agent that says, well, it could potentially go for over 150,000, might go for 155, 160, do not bank on that. Do not do all your numbers banking on that extra 5 or 10,000. Do it on the conservative number with the end market value being 150 in this example. If it goes over, great, that's a bonus, and chances are if you've got a really good finish and you're attracting the right buyer, which we're going to talk about, chances are it will go over the 150,000 mark. But we should never, as shrewd investors, shrewd developers, we should never look and factor on that extra 5 or 10,000 pounds, because that will skew the numbers, and then this is how you could end up losing money or not getting the profit that you anticipate. So the next thing we need to work out is what is the cost of the refurb, the renovation work. And we need to ask ourselves, how much of our power team do we need to bring in? You could have a builder who coordinates all the different trades on your behalf, and that builder will come on and then they'll do the full renovation. If you're having to do some alterations, some structural work, or an extra bedroom, or taking down a wall, or an extension and so forth, you might need to call in, you will need to call in a structural engineer and an architect. So there's extra people to your power team that will assist the builder to do the finish. And always get a reputable builder. Never try and scrape on the price here. If a builder gives you a quote which is £20,000 to do some works, then from that point of view, you want to make sure that that builder is getting a good finish, it's the right standard of materials that's required. More money should be spent on the kitchen and the bathroom overall, because that's where, when people come in, they get a feel for those two things, because they're the most expensive things if you think about it in a home, and that's where your focus should be with your budget. But of course you want to get a great finish throughout, especially if you're doing alterations, adding an extra bedroom, extensions, attic conversions. You need to make sure all of that is done right, and we want to make sure we've got a reputable builder who's able to carry out that standard or finish, and more importantly has a track record of doing that previously. And that will give you confidence that you're going to get the right finish. And be prepared to talk to your builder and ask for some before and after pictures of previous jobs and so forth that I've done. And you should not be overwhelmed if you're just getting started in your property journey and you want to become a property developer. You shouldn't be overwhelmed thinking about doing any of this stuff yourself. Your expertise should be in identifying an opportunity, a good investment. It should be in negotiating to get a discount in that property, but more importantly, it should be coordinating all the different moving parts from the purchasing process, from the builder, making sure they get the finish, you liaising with the estate agent, getting on the market, and making sure we attract the right end buyers. So you want to be in that process, overseeing the works. What you don't want to do is be pulled into doing the works in the property yourself, getting caught up with all the choosing the paint colours and the wallpapers and the floor coverings. Your builder, if they've been doing this for a living as a developer themselves, doing the construction and refurbishment works, they'll be able to point you in the right direction, give you advice on the right level of kitchen and bathroom and so forth. And remember, when you're doing your due diligence, you've seen properties that have been selling for, in this example, 150,000. So with those before and after pictures, you can, from your property you bought just now and how it needs to look, your builder can look at that and go, yes, they're going to use this kitchen, we recommend we do this, we use this tile, and this really makes a big difference. And more importantly, part of the due diligence process is having the estate agent who's going to be the end person to sell the property, to market the property, get their input. Because if they're operating in that market, they will know the standard of finishes required. They'll give you some extra tips in the sense of, maybe what type of lights to use as a differential factor of what normally gets used, and what type of just little subtleties that they could suggest that you could change that's going to help you maximise what you get as profit in terms of the sale, but more importantly, to attract the right buyers. So when the due diligence process, let's just recap. We want to understand the current market value. We want to know the end market value. We want to make sure we know the refurb cost. And if you get 3 builders out, you're going to get 3 different quotes. And the answer is, who do you choose? The cheapest, the middle, and the most expensive? Well, it's the one who determines the most amount of value and can produce and show you, that they can deliver on that type of renovation that's required. So once we know the renovation costs and so forth, we want to make sure that we're buying at discount. Keep that in mind. So when you're buying at discount, you're forcing that appreciation from day one. And then when we're looking at how much money do you want to make from profit. So from a property that's worth £100,000 and below, you want to be making a minimum of £15,000 profit. Now, just to clarify here, this is your investment criteria. You're not putting the full £100,000 down. This is £100,000 worth of value. If you think about it, if the house is going to be £100,000 that you're purchasing that at, you've got to put down a deposit, you've got to put down the refurb to renovate, you'll have legal fees and all associated professional fees such as tax and so forth to purchase the property. So your acquisition cost will only really be, in this example, 35, 40, £50,000 at most. So you're not putting down, you're not buying cash, the property, although you could do that, but the reason why you wouldn't is because you want your money to go a lot further so you can develop multiple properties at any one given time. So with this in mind, what you'd be best doing is leveraging a mortgage. So if you leverage a lender who's going to give you the mortgage, they're going to give you 75% loan to value, and then you just put down a deposit and all associated costs, and in that sense you're getting a massive uplift when you're factoring in £15,000 of profit per £100,000 of value. So if you're doing a renovation, adding value in a property that's worth £200,000, you should be looking for a minimum of £30,000 profit. If it's £300,000, £45,000 of profit. So that's the £15,000 per 100k of value, not dependent on how much you're investing, because you're only investing the deposit amounts, the renovation costs, the legals, and the associated professional fees. That's all. And this way you're always going to profit. Now think about it. Most people love the idea of investing in property, being a developer, and if you think about it, for someone who's in a senior position, been working in their 40s, 50s, 60s, they're probably earning a great salary of about 60, 70, 80,000 pounds a year. And in this same basis, you could literally flip 4 or 5 properties a year, leveraging your team, just being able to identify the right properties, but more importantly, to negotiate the right price, being shrewd with your due diligence, getting the right agent to sell the property and profiting. And if you're making £15,000 per property and you're doing 4 or 5 of those, you can replace a substantial income. And you're not going to be, stretched with your time. This is going to be something where you're only focusing 5 to 10 hours per week overseeing things. And this is why it's a great appeal to flip property. Even if you're a buy-to-let investor, you should cherry pick the absolute best deals to add to your portfolio and have a high investment criteria of what you'll accept to be in your portfolio, especially having cash flow and so forth, and then flip the rest, especially if it fits the criteria to give you that level of profit. And this just means it's money coming in, it's good cash flow, and it keeps things moving. Now, we said there's 2 parts. One, the due diligence, which we've covered, and the second part is how's the standard of finish, which is going to help you get that property sold. Well, when the standard of finish, when you're doing your due diligence and you see the property that's got the end market value and the end, renovation, what it looks like, what I tend to do, and speaking with my builder, but more importantly the estate agent, is just try and do a little tad better in terms of the renovation works. So again, I'll spend more money in the kitchen and the bathroom. I'll put nice tiles in and so forth, same tiled floors, maybe do a nice wooden hardwood floor into the entrance, into the hallway and so forth, maybe a feature wall in the living room and the lounge, and in the main master bedroom, so just extra nicer lights rather than lampshades and so forth, and maybe you'll do like higher skirtings and door frames just to give that finish, and nice neutral colours, and maybe just little things that's over and above the norm. And one thing you might want to do as well to really give that great feel when people come in and view the property is you might want to stage the property and use another company that comes in and they will furnish the property for you. And then what your estate agent should do, they'll go out and they'll take great pictures of it, maybe get a video walkthrough of the property as well, and they will market that. And your target market, especially where you're looking to source these type of properties, should have an element of first-time buyers there, because first-time buyers is going to be perfect for your walk-in condition, fully renovated property. Because think about it, first-time buyers, it's not always, but they will be 90% of the time your end user, your end client. They're not going to negotiate you down, and they're going to get emotionally caught up. They're going to go in there and go, wow, I don't need to do anything. I don't need to spend any money. I don't need to do anything. I just need to come in and make this my own home. Hey, in some cases, they'll actually buy the furniture that's in there that you've used to stage the property. So it's a win-win all round, and they get this kind of new build feel of the property, and it's finished to a good standard, and it's like the wow factor. And if the estate agent does a great job and they're really advertising and marketing this property, and they get enough people around inside the first couple of weeks it goes on the market, and you have got that standard of finish, it will drum up a lot of interest. And what ends up happening is what you'll find is your property will go to a closing date, and you'll have a bidding war. And this is where, again, we're never relying on anything over the end market value when you've done your due diligence, but chances are with the good finish and enough interest that it will go over the market value. And to make sure they've got the interest there, get your estate agent on board. This is part of the due diligence process as well. Ask them, is there interest for properties in this area? Have you sold other properties like this in the area? And how long did they stay in the market for? And what was the difference between that property selling and this one staying in the market a bit longer? So getting this information is going to help you with confidence to understand what it's going to take and the time frame to get a property sold. And if you can do this and you're leveraging your power team, you can make substantial profit by really managing numbers, buying right in the first place, and getting the right finish. I mean, it's a dream business to have, and it can continue to grow. And what will end up happening is your capacity will grow, and you'll end up doing 2, 3, 4 at any one given time. So rather than one at a time, you're doing a lot more. But more importantly, this can become a business where it just starts to grow and expand, and before you know it, you've replaced your income doing this more full time, if that's a goal. A lot of people love the whole feeling idea of being a property developer. So this is really how you flip property and make sure with the right due diligence, you're always going to make a profit. And as always, I'm open to questions. If you have any questions, comment below and I'll come in, interact and engage and answer those questions for you. So I look forward to hearing about your journey and how flips you've gone and done and what kind of profit you made as well. So great, thanks again and all the best, and bye for now. Hello, Paul McFadden here. So we're going to roll out a 2-day masterclass. In those 2 days, we're going to be covering everything to do with how to build a successful and profitable property business through buy-to-lets, buy-to-flips and property deal trading. 3 strong strategies that should be the core of your business. It's going to help you create cash flow, build a business, and more importantly, create that long-term wealth. So we're going to be covering all of this in a 2-day event which you can attend virtually, streaming live or in person. So all the information is below. Click there and check it out, and I look forward to seeing you there soon.